Good morning, Jim Barrett from RJO Futures, Monday morning, December 9th. All right, interesting day, Friday. Obviously, the unemployment number a little better than expected. 203,000, I believe. Anyways, the notes and bonds, seen a lot of selling in front of the number. We're well braced for the number. And it shows you how positioning sometimes trumps what looked like our economics. Bonds rallied huge off 128. The notes rallied big. The shorts only had a couple of the fast ones. The people that covered the shorts the fastest and made a market down there. Were the happy ones yesterday, and we bounced in a big way. I mean, even though the tapering is maybe somewhat more likely for December, probably still will be delayed into next year. It's obviously going to happen, but the market has dealt with it. I mean, the market's ready for it. The steep yield curve may be steep enough. The actual price levels that were notes, the 10s and 30s that is, are trading at maybe high enough to handle the whole picture. Today, or rather, yeah, today we had a number of Fed governors speaking a little later. One starting at 11:30 Central Time, Lacker speaks. 12:50, James Bullard speaks somewhere else. Richard Fisher at 1:15, and then Fisher again this evening. So we'll hear from these guys. We'll hear about what they think about Friday's number. That is the unemployment number. Will we hear any, hard news about actually beginning or not beginning? Probably not. We got an FOMC meeting next week, which will be a big deal. So it seems like we're always waiting for FOMC meetings lately. Here's another one coming up. As far as the economic numbers this week, of course, the claims number will be interesting. And then probably retail sales. We got to wait till Thursday for the retail sales. Meanwhile, Wednesday, there's a 10-year note auction. I mean, at these levels, even though we bounced pretty good Friday, I mean, these levels I think will still be attractive enough that these auctions should go well, or that auction should go well. Producer price index on Friday. Remember, there is a bit of concern of deflation out there. Anyways, the stock market continues to recover. Or not recover, but test higher. This may reduce how much the notes and bonds can actually bounce. There's a budget deal they're talking about, which will actually reduce automatic spending cuts, pull back a little bit on the sequester. That may be another little boost to the economy and keeping notes and bond yields higher than otherwise, but not dramatically so. In other words, I expect the trading range we've been in to hold. I don't expect to see 10-year notes pressing the 3% this week. They seemingly have handled this uptick in employment. I can be reached at 800-500-2461 to discuss any futures market. Please give me a ring. Remember, there is a risk of loss in futures trading. Thank you.